Even after a big bang RBI policy, why have 10-year yields in India risen? India's 10-year bond yields opened this week at 6.29%. And as we record this, yields are trading at 6.35%, nearly 10 basis points above where it stood on Thursday, the 5th of June, just one day ahead of the big bang RBI policy. Remember last week, RBI's policy delivered two significant surprises: 50 basis points repo rate cut and 100 basis points CRR cut, well above market expectations. Why have yields risen then when one should have expected that they drop? Let's break this down into four quick reasons. Reason number one: RBI's repo cut has shrunk India's policy rate spread with that of the US Fed. It now stands at 100 basis points. Remember, India's is at 5.5% and the Federal Reserve's is at 4.5%. Now, this greatly reduces the structural rate support for the rupee. Reason number two: on a fully hedged basis, after last week's RBI rate cut, FIIs mathematically might not make money in India debt. Why? India at 6.35% 10-year yield and the US 10-year yield at 4.45, the spread the FIIs would make roughly on this is 1.9%. Hedging the rupee for an FII costs around 2.1%, and therefore 1.9% spread and a hedging cost of 2.1%, you're left with 0.2% negative spread, effectively a loss. Without doing any of this, the FII can just simply get 4.45% on the US 10-year yield with no forex risk whatsoever. And this, therefore, can be seen as greatly reducing the incentive for FII money flowing into debt, placing more pressure on FII equity flows and other forms of flows like ECBs, NRI deposits, etc. Reason number three: the third RBI surprise in the policy was a change in stance. As the dust settled around the RBI's monetary policy, markets realized that the rate cut cycle was probably over for most of FY26. Reason number four: crude prices have moved higher to $67 per barrel from $60 a barrel seen just around a month ago. Markets broadly expect price stickiness due to expected short covering and trade-related uncertainties. So there you have it. These are probably the four key reasons why India 10-year yields are much higher than where they were before the RBI policy. We'll see you the next time with another interesting and relevant topic as this. If you'd like us to speak on something else, please do send us your comments below.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.